All right, all right, all right. How's everybody doing this morning? Great to be here. That's a little big, Lamb. Let's go down here. Oh, we do that. There we go. All right. Hope everybody's enjoying their nice weekend. Nice long weekend and a Monday. So here we are, Tuesday morning. And the reason we're here is we're going to go through the information that we did in class last Friday. Now, Friday night, when we taught our class down at the university, the markets were closed. And so we were talking about different types of orders. And it just so happened that we talked about different types of orders on a night that the markets are closed. So we have to do today in the lab all the wonderful things that we learned academically at the university. Well, that's what the university is for, right? It's to learn the academics. Now we're going to put the applied science to work. And so today we're going to learn about different types of orders. And I'm just going to use track and trade over here. And I'm going to show you how these orders work. Now, if you're using a different trading platform, you might see a little bit of differences between how the software I use does it versus the software you use does it. Most traditional software programs, when you want to trade something, pop up a little box and they say, okay, I want to trade 10 shares of the Apple and I want to have it at this price. And you do all these, you fill in all these little boxes and questions. And I want to use a drop down here for a limit, a market, or stop order. And you just do all this stuff. And it's very confusing for most people. All right. And it takes a long time. You have to sit there and fill this whole thing out. And if you don't do it right, it just grays one out. And you're like, I don't know what I'm doing wrong here. Let's see. Not sure. So it's kind of a pain in the behind to do things. So most people just use market orders because market orders are easy. They just say, I want to buy, boom, and you hit the buy button. And they don't use any sophisticated trading strategies because that's confusing, right? Oh, I don't want to have to use a limit order and a market order at the same time. That's hard. So, but that's what makes you, that extra level of giving you a different edge on your trading. You got to do things that make you better than everybody else. Because remember, this is a game of chess. And, your goal is to pin the king in the corner and make him not move. Their job is to take all your pieces, right? So that's the name of the game. You got to kind of be a little bit better than everybody else. And if everybody else is just using market orders, well, you can be better than them by using different types of orders and using combinations of orders and having the software help you trade and move orders and do all kinds of neat stuff that can kind of give you a little bit of an advanced capability than others. And so that's where track and trade comes into play. It gives you the ability to do lots of things with orders. So order entry management is very important key component. And so I want to make sure that we understand that. And we're going to go through and we're going to start showing you some of the order tools. We're going to start very simple, and we're going to, by the end of this class, we're going to be quite sophisticated in our order trading strategy. And I'm not going to expect you to be able to do this yourself right out of the gate, like, okay, now I've taught you. Now you're going to be a superhero trader with all of these order tools. No, it's going to take you a little bit of practice, a little bit of time, a little bit of effort to understand some of these tools. And so just watch me do them, and we'll go through and practice them. And then you can watch this video over and over and over again, and you'll learn a little bit better about how to do some of these order tools. We're going to start off very simple. In track and trade, we just come over here to the control panel, and on the right-hand side of the chart, you have a tab that opens up your trading tab. And you see that you have just kind of your little accounting window here that tells you just a quick accounting. Down here at the bottom is where your big accounting window is. We could kind of close that out, or we could we'll just leave it open. There's plenty of room here on the screen today. And so what we're going to do is we're going to come over here and notice that we have 6 buttons. We have stop, buy market, exit chart, limit, sell market, exit all. So if you right click on these buttons, you'll notice that you have the ability to change them from day or good till canceled. Day means that it'll cancel all by itself at the end of the day if it doesn't fill, if it's an open order. So if you have open orders and you have closed orders. So an open order means I want a price at a specific level. And if it doesn't fill it, then throw my order away. I don't want it anymore by the end of the day. We'll show you how come that might happen. But you have the ability to right click on your charts and make those changes. So of course, a buy market, if you right click on it, nothing happens because you can't have open market orders. Now remember, a market order gets you into the market at the quickest possible price at the, you know what? I am going to, rather than try to just shoot from the hip with all this stuff, I think that we had, let me see if we got that. Nope, we don't. Oh yeah, we do. We do have it. We do have it. Give me 1 second. We're going to pull up the slides from our class on Friday. That'll make it easier than me just sitting here telling you. That was in the UTU class technicals. Class 4, right? Class 4 dash technicals. And then it was UTU dash class 3. So if you would like to have these slides, there's the URL right there. Okay. So let's go ahead and bring those up right here so you guys can have that. That's a good idea, Lan. Okay. There you go. And that's the URL, lanturner.com, UTU Class 4 Technicals, UTU Class 3 Technicals PDF. That's the URL that you're going to type in so that these slides come up for you. And then we're going to go down through, I'll just skip all that stuff. We're going to come down here and talk about the very first level, which is that's the bid-ask spread, about the buy markets, the market orders. All right. So that'll make it easier for us. So a market order is the quickest way to enter and or exit a market, meant to execute as quickly as possible, guarantees an immediate fill, receives current market price, no price guarantee, subject to slippage, and is usually our buy-sell buttons in the software. So that makes it very simple. Now, when we come over here, you see that's the buy-sell markets right here. Now, there's no guarantee of price, but it's going to get you into the market as quickly as possible. So let's say right now, let's run one of these as an example. We think the market's going to turn around and fall back down, and we want to take advantage of that. Of course, we can just hit the sell button, and that's it. We're in the market to the short side. That is a market order. And if the market continues to fall because you sold first, and then you can sell first and buy back low later, right? So we're up 170, 80, 190, $200 at this point. You can see over here 240. And then if you want to get out, you say, I want to take my money. You just hit exit chart and you've taken your profit of $195. There you go. You're like, $195 that fast? That was really cool. Yeah, but you can lose money that fast too. So let's come over here to charts, and you can go down to the micro, and we'll go to a 2-minute micro, and it looks just the same. But watch this. Now when we come over here and we go to trade and we say sell market, and if it doesn't keep going down, now we start losing money. If it starts going back up, making money if it goes down, now we're not risking quite so much either. So rather than $195 in 10 seconds, where you can see up here, it's a little bit less money. You're going to make less money, but you're also going to lose less money. So it's $3, $4, $5. It's moving a little bit more slowly. Well, the market's moving the same. It's just not as much leverage. But anyway, that's your market order. And so that's how you get in with a market order. And if you want to get out, you can hit sell market or buy market because we hit sell market first, right? You just have to offset it. Okay, we've made our, well, let's see if we make some money first. Let's try and make some money. Okay, we're up $11. All we have to do is hit buy market. And now buy market, we just made some money. So we have our two closed out positions. One of them was $195. One of them was $13. So depending on how aggressive you want to be in the market can determine which market you want to trade. So this is the NASDAQ 100 micro. This is the NASDAQ 100 mini. And so if we go back over to the micro, this is the micro, back over to order trading. Now, that's two ways of using market orders to get into the market. Now, let's say that we think the market's going to go back up. You'd hit buy market, just like that. And it puts a little line on the screen, right where you're at. And it shows you that you're now long the market. If the market goes up, you'll make money. If the market goes down, you lose money. So now we're looking over here and watching, we're losing. Oh, now we're making money. It's market started to go back up again. So we're up $3, $4, $5. Now you got to remember, you don't want to sit here and scalp out $3, $4, $5 because your commissions are going to be $3, $4, $5. So you got to make enough money to cover your commissions before you get back out. So now you can use the exit chart or exit all. What is exit all? Well, what if I have an order over here on both charts? What if I have one over here on the NASDAQ mini and one over here on the micro? So I have two orders. Let's come in here and place that. We'll come in here and we're going to say, okay, I'm going to buy market over here. So now I have two orders. So if I come up here, I can bring them on the screen and I have two orders. Now if I come over to the trading tab and I hit exit all, boom, exit all takes me out of both markets at the same time. So now it didn't just clear out the mini, it also cleared out the micro. That's the exit all. It takes you off of everything. Everything you got in the whole, all your charts are all closed at the same time. So now you can see now we've closed out $195, we closed out $13, we closed out $150, we closed out $23. So that's a market order. If you just sit there and play with your market orders and you got your quantities up here and you can change your quantities, but you're just hitting the buy market and the sell market. Let's come in here. We don't need, let's just play with the 2-minute chart. Let's delete that one and let's delete this one. And we'll come up here and we'll just bring up these two charts. How's that? Side by side. Okay, so this is, let's put the mini over here and the micro over here. So we're going to play with the micro. Mostly this is the mini. And they're the same chart, You can see they're basically the same chart. But this is just different leverage. So if we bring our dollar sign in here, you can see from here to here on this is the micro. That's $487 move this morning. Or if you were on the mini, that was a big move. That was a $4,570 move. So you can see that this is 10 times bigger than this one. So you make 10 times more money, but you also risk 10 times more money when you take a risk on the other side that you might lose 10 times more money. Just depends on which market you want to work with. And this market's really moving a lot today. So you might want to go down to the little smaller one today. So then that is our first, let's see, we don't need this. Let me come over here. Make sure everything's good. Copacetic over here. All right. So now we're going to come over here and we're going to go back to our classroom and we're going to go to the next one. The next one is the stop order. It's used to execute entry and exit at a specified price. Set price trigger points. Buy orders must be placed above the market. Sell orders must be placed below the market. Sell orders, once triggered, becomes a market order. So remember, market orders are subject to slippage, meaning that they don't get the exact price that you asked for. So a stop order is not going to get the exact price you asked for either. It might, but it's got the chance that it's not going to get the exact price you asked for. So it becomes a market order, which does not give you the exact price you asked for. It might, but it doesn't necessarily have to. So let's come in here and do that again. Let's go full screen on this one, just so we're seeing the same thing, full screen. All right. Now we're going to use a stop order. Now, if I use a stop order, you don't just click it like you do a mount. You have to specify a price. But because we don't have one of those little pop-up boxes that comes up and says, I want to buy 6 of these at this price on this level and then I want it to be, and you have to type in all those boxes. We don't do that. So what you do in here is you just click it, but because you have to specify a price, it drops a little marker on the screen. And so I just clicked the left mouse button. That's all I did. And you'll notice it dropped a little marker on the screen. Now I bring my mouse over to the screen and it's going to jump to the cursor. Now I still haven't touched the mouse, the buttons. The buttons are still free and clear. And I can move this little marker up on the screen. And what that's going to do is it's going to put it on the price I want. And the reason we do it this way is because we want to line up our orders with areas of support and resistance. Remember, we got resistance above and support below. So if you want to put your order right exactly where the bars are, rather than coming in with a little tool and trying to measure it and say, I think that market was this, and then fill out a little box that says, I want my stop order to be right above. And you look and you measure, and oh, my order price was here, and that's where I want my stop order. Fill out the little box. That's a pain in the ass. So what we do is we come in here and we just use this little marker and we can drop it on the screen. Now remember, rules that they must be placed above or below. So set price trigger point, a buy stop order must be placed above the current market price, and the sell stop order must be placed below the current market price. Okay, well, if we're going to do that with a little marker from Track and Trade, we click the button, it puts it on the screen, we bring our mouse over onto the screen, it jumps to our cursor. If we're below the market, you can see that it's modifying the order right here, and it's a sell one stop, and it's red. And it's red because it's a sell and it's below the current market price. Now, if I slide it above, it's going to flip to green because it knows that the rules for a stop order, which is what you clicked, is that it's got to be a buy order above the market, and you've slid your little marker above the market. So it knows that it's going to be a buy order because that's the rule. It has to be a buy order. You can't have a sell order, stop order above the market. So a stop order is either red below or green above. And that's the idea of that, is that, well, if the market continues to rise above a specific price, and I can just click the mouse, I can put it right where I want it. I say, I want it, if it breaks above that level, I can click the button. And now I got an order that says if that market starts to rise again and it passes above that previous high of that marker, get me in. So let's see if we can trigger that order for entry. So there it is. See that? Now we just put an order in there. It's called an open stop order. And if the market breaks above the previous high, it's going to get you in as the market crosses above that area of resistance. So it's crossing above the area of resistance. We're up $22. You can either stay in or you can just hit exit chart and get out. Now, because you're long one field, you can hit sell market. That'll get you out too. You can hit sell market or you can just hit exit chart. So, oh, I want my profits. Exit chart. You're out. You took your money. Now, you can stay in longer, of course, and wait for it to go, but that's not the point of this class. The point of this class is just to show you how these order tools work. So now what we're going to do is, if you remember, we have all of our different trading patterns, right? So if we come back over to here's the one I had prepared for you right here. If you remember, we have all of these different strategies. Let's can we make this a little smaller so we get more on the screen at once? There we go. So we have all these different patterns that we use these orders against, right? So as we come in, we can see all these different patterns, all the different things that we do. And you can get this. Oh, this is the Fibonacci effect book. This is the book. You can buy the book online at sfomagazine.com. Just go to sfomagazine.com, go into the store, and you can buy this book, or you can buy it on Amazon. You buy the print version. The one at SFO is the digital version. And for those guys of you who are in the class at the university, you have this book. It was the manual to the class. So if you are not part of the university, then you can buy this book online. Just go to Amazon and search Lan H. Turner. You got to put the H in there. So Lan, L-A-N, H. Turner, and you can buy this book on Amazon. It's a paper version. It's about 220 pages long of all these different trading strategies, concepts that we teach at the university. All right. But if you would like the digital version, it's a lot less expensive, and you can just get it over at sfomagazine.com. So there you go. That is the little different patterns that we talked about in class. And you can put your stop orders. Let's find some. Let's come in here and I'll show you some of the other ones. Like this one here. So let's talk about this one here. This is called the intercept order. And so we're going to come over and we're going to go over to the next one that we want to talk about, which is the limit orders. So the limit orders are used to execute, exit, or a specified price at a specified price, entry or exit at a specified price. So it's a limit order used to execute, entry, or exit at a specified price. You're going to set price trigger points. Buy orders must be placed below the market. Sell orders must be placed above the market. Market is required to give you the specified price or better. So that's the difference between a stop order. So this is a limit order and a stop order. Again, just to review, a stop order, right? Set price triggers for entry or exit at a specified price. Buy orders must be placed above the market. Sell orders must be placed below the market. But a limit order, buy orders must be placed below the market. Sell orders must be placed above the market. So it's just the opposite. So let's go over and do a few of these. All right. So now we're going to come in. We're going to use a limit order. So the limit order is the same thing. You're going to click the little button. It's going to put the marker on the screen. You're going to bring the mouse over the top of the screen, and you're going to move your marker above or below. And you can see that when it's below, it's a green. When it's above, it's a red. Because, again, the rules are you have to sell limit above the market, buy limit below the market. So that's why it goes above the market, it's red. Below the market, it's green. Now, the difference between a limit and a stop is that a limit order has to give you that exact price, right? So if we specify, if we drop this in here, we want to buy below the market, and let's just put this in here right here. What this is going to do is it's telling us that we're going to buy on a limit, meaning that it's going to give us that exact price that we set it at. And what we set it at, if it can't give us that price or better, then it won't fill the order. So it's got to give us that price or better. Whereas a stop order, all it has to do is touch that price, and then if the market moves a little bit, it'll still get us in. It just won't be at the exact price. So that's the difference between a limit and a stop on how it's going to fill. It's got to give you the exact price or better. So sometimes the market might come down, hit your price, turn around and go right back up, and won't give you the order because it didn't have a chance to fill it at that price because you get into the queue. Remember we talked about the queue where all of your orders line up, and then who's ever ahead of you gets to have their order filled before you. And so if the market can't get you up to the front of the queue before it moves, well, you might have a limit order that doesn't get filled, even though the market went to that price. So you got to keep that in mind, that a limit order has a restriction where it won't fill it for you if it's not that price or better. So now what we're going to use is we're going to use this order. You can use it to get in. Let's say if the market comes down and touches this level, this is an open limit order. What would have to happen? The market would have to come down. It would have to touch this order, get filled, and turn around and go up to make money. Now, we don't usually use limit orders for that purpose, but you can. And some more advanced trading strategies will use the order to buy as the market comes down. One of the strategies in your book is called the Christmas tree or Balaam's ladder. And so what you do is you come in and you put limit orders as the market comes down like this. And as the market comes down, it will keep filling your limit orders on the way down, right? Called the Christmas tree. The reason it's Christmas tree because you got lots of green orders like this. And as the market comes down, it's going to fill one here, fill one here, fill one here, fill one here, fill one down here. And so the idea is that you're going to dollar cost average down as the market comes in anticipation of a reversal of the market turning going back up. So the market might come down and fill these three orders and then turn around and start to go up, and you'd have an average price of those three orders right in there, and you would be long from that position. That's how that works. So there's advanced strategies that you can use to use buy limits below the market. And of course, you've got the same thing going the other side. You can come in, and this is called Balaam's ladder. The reason we call it Balaam's ladder is because you're playing with the devil, because there's no top to the market, right? So you're going to come in here, and you're going to go like this, and you're going to say, I'm just going to keep selling, 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 selling all the way up this trend, building a bigger and bigger and bigger position as the market moves higher. And then maybe the market will come in and it will go up, and you'll get short, 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 short. And then eventually it turns and flushes like that. And you have all these positions build up because you don't know where the market's going to turn. So that's a couple of strategies. Those are a little bit more advanced strategies, not exactly how we generally use trading open limit orders, but just to give you an example. And those are in your book too. Those are in your manual to teach you these. And I think there also might be in the supplement that we talked about here, the supplement. The supplement. Where's the supplement? Let's give you the supplement too. www.sfo magazine, since we are now sfomagazine.com instead of Pit News Magazine. And I think it's just slides, right? .pdf. And there they are. There's your supplement. And the supplement, let's bring that over here. And the supplement is to the manual. So it also gives you lots of different patterns in here. So you can see some of the same patterns that are in the manual are in the supplement, but we got a couple of more in here too, like the intercept, and we're going to talk about these next. So that's how that works. And I'm not sure if, I think that the I don't think the Christmas tree is in here. I think the Christmas tree, oh, there it is. There's Balaam's ladder right there. So there's Balaam's ladder, shows you how this works. And then the Christmas tree is this one here. So there's the Christmas tree in the supplement. All right, so we got that covered. We can do this one here is called the King Tut. There's all kinds of fancy things that you can do, and they're all in the manual and in the supplement that show you how to do all these different trading strategies. This is one of my favorites called the Cat's Meow. So we're going to go over and we're going to trade some of these. All right, so we're going to come in. Let's clear all these. Now, how would I get all these off the screen? I don't want them anymore. Just hit exit all, and it takes them all off. See that? Or you could hit exit chart. Exit all would take them off the other chart too. So this and here, we only had them on this chart, so we just hit exit chart. All right, so now we're going to come in. We're going to use, we've used a stop order. Let's put a stop order above the market. Let's put a limit order above the market. Let's put a stop order below the market and a limit order below the market. Now remember, because none of these are being filled, there's no commission. You don't have to pay a commission to put an order on the screen. You only have to pay a commission if the order gets filled. So the orders are open, so they're not going to get filled. So that's just an example to show you. This is not necessarily a strategy. This is just showing you that the buy stop above is a green and a sell stop above is red. And a sell stop below is red and a buy stop below is green. So very simple, very easy once you understand it from that standpoint, and you can visually represent it on the screen, and it's very easy to remember. So let's go ahead and hit exit chart. We'll just get rid of all those. And now what would we do? Let's come in here and set up some strategies. Let's use the limit order in a way that it was mostly meant to be used, which is to take a profit. So let's say that we're in the market. Let's just go ahead and we'll hit buy market. Now we're long the market. There we go. If the market goes up, we make money. So what we're going to do is we're going to use a limit order above the market to take our profits. So that's a sell, open sell order, open sell order. So what that's going to do is you're long the market. If the market goes up and touches that red line, it's going to take you out of the market. That's what that would do, right? Very simple, very easy. We just got in with a buy market and the market's going down. So, oh no, it's going down. We better protect ourselves to the downside too. So we can use a stop order, come in here, drop a stop in here, and we're going to put it right on those yellow dots. See that? And now, can you see that? This light is not very bright. Let's go see if we can preferences on the orders and order preferences. Let's see preferences. And let's make that line. I think we can make that line brighter. It's just red. Let's see if we got a brighter red. Got a brighter red. That's about as bright as it gets. Orange red. Well, I guess it's as save and update. Let's see what this one is. I guess it goes kind of dark unless you select it. When you select it, it goes brighter. Oh, I see. It's got two different colors. Okay. I'm trying to make it a little brighter so you can see it better. I guess you're going to have to, well, maybe what we can do is we can come in here and we can click on it and make it brighter this way. Maybe that's helpful. That didn't help much. Oh, that's the green one. Make the red one. There we go. Save. Update all orders. All right, we'll try that. See if that can help it. I just worried that you guys can't see it very well. All right, see that? Okay, so the market was going down. We were like, okay, if it goes up, we make money on the way up, and then it would hit our limit order and take our profits. But we also used a stop order on the way down to protect ourselves to get out if we were wrong. So we were wrong, and look, the market stopped us out with a $24 loss. So that was good. It's helpful. Oh, it got us out. Let's come in here to little ATR dots. We're going to make those a little brighter too, because I'm going to show you something really cool right now. So now we can make these orders move for you. So we can make the orders move. We're kind of in a precarious position right now to make it move, but let's see if we can. I'm going to have to wait. Let's go to a different chart and see if we can get one that's not precarious. Let's go in here and we're going to go to the Dow. Let's go pull up the Dow Micro. And we'll pull up the Dow. And it's retrieving our data. We'll go down to a 2-minute chart, just like the other one. Turn on Heiken Ashi. All right, that's what the Dow looks like. Yeah, that's a better situation for us. Let's make it a little bit bigger. And we're gonna, oh, we gotta make those ATR dots bigger. I'm gonna save it this time. Save, update, trade. All right, now what we can do is we can say, okay, well, we think this market's going to continue higher. I actually don't. I think it's going to probably go like this. You think it's going to go up and then maybe flush back down? If we do, watch this. We can say, um, we're going to go like this. We'll come in with a stop order, and I'm just going to drop it anywhere on the screen down here. I don't care where it is, just as long as it's below those yellow dots. I drop it way down here. Now I'm going to pull up the little box. You right click on it, you say edit the order, and it brings up that little box that everybody that I've been ragging against. So now we're going to come in, we're going to tell it we're going to trail, and it's just a single entry. It's not an OCO. We'll talk about OCO orders, which are down here in a minute. Entry, and we're going to come in and we're going to say trail on the ATR. Now you can have it trail on lots of things, but we're going to choose the ATR right now, which is those little yellow dots, and we're going to say trail on that, and we're going to say okay. And we can change the quantity. We could actually do more than just one contract, but we're just doing one contract right now. So we're going to do that. And now what it's going to do is it's going to follow those little yellow dots, and it's going to trail up until the market turns and falls and crosses those little yellow dots, and we get a sell signal, and it falls to the downside. So see that we got an open stop order. Remember, the rule of a stop order is that it has to be placed below the market. So it is. And it's also automatically moving or trailing on those yellow dots. Now we can make those yellow dots closer or farther away. That's our trailing stop. So right here, see, I've got it set to an ATR period of 1, which is just one price bar. And then the stop factor is 1. So if we want to make it closer, we can make that a smaller number, or we can make it bigger, and it'll make that yellow dot get closer or farther away from the market. So right now we're set at a 1-to-1, and I'm just going to leave it right there because it looks like it's getting ready to cross. And then as soon as it crosses that yellow dot, it will fill our order, and we'll be short the market. Short the market, of course, means we're going to make money when the market goes down. So we'll have to use a buy order to get out because we sold first. All right, there it goes. So it crossed the yellow dots. Now we're going to wait for and anticipate that it continues down. But Lan, what if it doesn't continue down and turns and starts to go up now? Well, then you'll start losing money. So we have to protect ourselves with a parachute stop. So we're going to come in here and we're going to just drop a stop above the market. And right now we're just going to put it right above those bars right there. And we click, and now you have a protective stop. So if the market does turn around and start going back up, well, you're going to lose the amount of money between where you got in, the short position, and where you'd get out, which is the open stop. That's how you protect yourself. Now you can get up and go cook some eggs or do whatever you need to do because the computer's all set up and you're protected, and you're going to make money on the downside. The only problem with that is if you did make a whole bunch of money while you were off eating eggs, this would come all the way down here and you make all this money, right? How much money would you make if it goes all the way down there? You'd make $178 while you're cooking eggs, and then it might turn around and go all the way back up, and the only time it's going to get you out is if it hits that green line, which would be a loss. How much would a loss be? Well, the difference between the red line and the green line. So that would be your $22 loss. But yet you had a profit of $178. It's like, oh no, I was off cooking eggs, made $178, but then when I came back, it had turned around and come all the way back up and stopped me out with a loss. Well, that's no fun. So what we can do, let's see if we can get an example going here. If the market will cooperate with us and actually continue to fall, then we could tell that stop right there to trail down behind the yellow dots, because the yellow dots will flip to the other side, just like this, right? So just like over here, the yellow dots will flip to the other side and start going down. Now the dots don't have to flip for you to tell it. So we can come in here and tell it edit, because it's above the market. It knows it's got to wait for the dots to cross. We can say trail ATR, hit OK. Must be placed above the current market price. It is. Our order is placed above edit. We're going to trail on the ATR stop. Oh, stop orders must be placed above. It is. It's probably not going to let me do it unless I right click and say add OCO. I didn't want to do an OCO yet. All right, now we can tell it edit. Now we have to come down into this box down here. Trail ATR, say okay. Uh-oh. It might be. Why in the heck is it playing stupid like that? That should let us put that order in there. I wonder why the rules are not letting us do that. Maybe because well, that doesn't make sense. Let's wait a second and see if the order has to be below we got a new rule in there. That's not right. My stop order is above the market. I should be able to place that order there. Just because this is losing money doesn't mean anything. I should be able to put that right there, and it's not going to let me trail it. ATR. That should let that go in there. There's no reason why that shouldn't go in there. I'm going to talk to the programmers and find out how come that's not letting me do that. Because that's not right. That's supposed to be able to do that. They might have to wait until I'll bet you they make us wait until the market gets below the yellow dot. But we could test that. Come on, slow market. Dow's worse than the NASDAQ, being how slow it is. Trying to get an opportunity here to show some. Let's see if we can. Let's wait for the dot to flip, and then we'll see if that'll let me place that order. Well, the Dow's not moving. Let's come over and see the NASDAQ. Well, the NASDAQ already moved. Let's see if we can get that in there. We're going to come in here, and we're going to sell the market because that's where we're at. And we're going to put our stop anywhere up here. Now I go over to edit, and I'm going to tell it to trail on the ATR. And that should go right to that. There, did it. Okay. So it might be on the NASDAQ. They're making us have to wait for the dot to flip before they let us set that. And that's not right. Shouldn't have to wait. That should trail on the ATR. That might be the rule that they have to use. Otherwise, it would jump across to the other side. If I said cross to the yellow dot, it would jump to this yellow dot, which is on the wrong side, and it can't do that. That's probably why it's giving us grief. Come on. You're going the wrong way. Bring our order in here. Put it right there. If it goes any higher, we'll get out. See, that's what your buy stop is. The OCOs are one cancels other, and there's a number of ways you can put those on. It's a little bit more sophisticated. I just wanted to do this manually first and then show you some of the advanced methods, but I was trying some stuff here, seeing why it wasn't cooperating. This one cooperated because the dots had already flipped. So now we're short and we're trailing on the stops. It's starting to go back against us again. This market's starting to get choppy. Come on, go down, go down. So see, that stop will now trail on those yellow dots and stop us out. So that's the name of the game there. And it's going to go back and looks like it wants to turn around and go back and stop us out. Let's wait and see. We can also, let me show you something else we can do while we're watching this move. We can also come in here. Let's place another order. We're going to come in with another stop order. And I'm just going to drop it anywhere you want. Anywhere down here underneath. It doesn't matter. Just drop it. And then you're going to program it. Right click on it, edit order, and we get the little box in here. And I'm going to tell it to trail on price bars back. And I'm going to tell it to trail one price bar back. And I'm going to go like that. Now what it's going to do is going to jump up to the previous price bars low. And then it will turn. If this market turns and starts to go back down, it will fill my order on the one price bar. And I'll be short 2 orders to the short side. If it goes up there and hits that yellow dot, though, it's going to stop me out with a loss. I don't want to take a loss. So let's see if it'll start to drop. And if it does, it'll get us in with a second one to the short side. Let's go like this. What have we got going? We got more than one thing we can be doing at a time. We don't have to sit and wait. Come on, turn off all the auto scales. I don't want auto scale on any of you guys. All right, this one here, we're losing money. Oh, we just got stopped out. So now we're not in that one anymore. This in here is still going up, going to go stop us out with our trailing stop. Now see, our trailing stop jumped to the previous price bar because we had a new price bar. It really wants to go up there and stop us out, doesn't it? Give us a loss. There it goes. Now it's starting to come back down. Let's see if it'll cross over our order. See that? It's going to cross over our order and fill us now. Then we'll have two, and we'll have two at the average price. So this one here, this one here. If it fills that one, we'd have one right dead center. That would actually be quantity two, would be dead center of those two dots, or those two lines. Come on, do it for us. There we go. See that? Now that jumped up and this one jumped down. We have an average price of short two now. So now we only have a stop up here to protect us, a buy one. So if we come in here and we edit this, we should be able to change the quantity on there to two, hit OK. And now we have our stop order set to two, and then we're going to be out with two. See that? Or short with two. So this will now stop out both of them if it turns around and goes back up. And it's trailing automatically on the yellow dots. Not being very cooperative. All right, this one looks like it wants to go down. Now watch this. We can do this. We can come in here and we can go stop. This is one of my favorite tricks. This is called the intercept. Go like this, and we trail on the little ATR with the contract up on the little yellow dots. And that one didn't, disappeared. I do not. Oh, there it is. Just took it a second. Being slow. All right. So now we're trailing on the little yellow dots. What do we just got stopped out with another loss? This market just turned and started to go back up again. Hit our stop, took out both of our positions, and we lost $51. So that stopped us from losing more money. This market's just chopping sideways now. It's not being any fun at all. So let's say that we think it's going to go rise now. So now we can just hit a market order to buy, and we can put our stop order in here. And I should be able to tell it. I don't know. Well, it's probably not going to let me tell it the ATR because the ATR hasn't flipped to our side yet. I wonder, it'll let us do the bars though. Bars back one. So we do one. So now we're going to just trail one price bar back. And then when that yellow dot flips to this side, I think that's when it'll let us tell it to trail it. Let's try it. I want to try it one more time. ATR, what is it going to do? Oh, it did it that time. I wonder what the difference is. So now it says it's going to trail the ATR, but the ATR is on the wrong side. So it's just going to sit here and wait for the ATR to jump. And then when the ATR flips to this side, it should start trailing on it. I don't know why it wasn't working the time before. I think it might have been because the order was this side of the strike price. Which I don't know why that would make a difference. All right, so this one is trailing up with an open ATR. An open stop, so it's going to catch a reversal. So this one's going to have to go up and then turn around and come back down to get into the market on that one. This one is just long, so it's going to make money as the market rises. And this is a sell stop, so it's going to get us out. There it goes. So there it jumped to the, now it did it right that time. So now it jumped to the yellow dot, and that will trail up behind the market. Now you're like, that dot's too far away. I get stopped out and I lose too much money. Okay, we'll come into the preferences of the ATR. We'll click on the ATR right here, and we say, make it tighter. So we can pull that little dot up. See that? You can put it where you want it. Next time we get a new price bar, since it's a 2-minute chart, it's going to be 1 minute and 30 seconds. We should probably put that to a 1-minute chart so we get some faster action here. But I can move that little dot where I want it, just like this. Now, if you put the dot behind where your order is, it's not going to jump backwards. See that? Orders never jump backwards. They only jump forward. So if you move it, if you move that little dot here, it won't jump to the new dot until you get a new price bar. Once you get a new price bar, it'll jump to the new dot. So you can put that little yellow dot right where you want it as a stop. We're going to put it right at about there. Now in 52 seconds, that will move up there. Let's come over here to this one, and I'll go to charts. Change that to a 1-minute chart so we're not waiting so long. No, I did that. I don't want it to be that big. There we go. Okay. That one's got 16 seconds. Let's make it a little bigger. It's got 16 seconds, then that's going to jump to the next dot. Get a new bar. It's countdowns right there. 7, 6, 5, 4, 3, 2, 1. Watch your order. See, it jumped automatically, all by itself. All right. Delete all drawing tools. Okay, so now we just need that market to rise. Rise, rise, rise. Now we're on a 1-minute chart over here. Let's see if we can get a little more action going. Practice some of these order types. All right, so now what do we think the market's going to do? Well, it's not doing anything. It's dead. Died. Let's bring this one up. What are we doing here? Let's make this one bigger. It's just flat. Look how dead it is. Completely dead. It's as small as you're going to let me make it. Okay. So let's say that we think the market's going to go down. We can take our trade, go in here, put our limit stop order underneath the market. Oh, we missed it. We missed our opportunity to get in. So, okay, we just take a short. Just hit sell. Now we're going to put our stop order above the market. Let's just put it way up here. Doesn't matter. Go in here, parachute stop, edit our parachute stop, say trail. We're going to trail either on the ATR. Probably not going to let us do it because the ATR hasn't flipped yet. So we're going to do price bars back. Price bars back. Just do one price bar back. Say, okay, there. It's going to sit right there. As soon as that yellow dot flips, we can switch it to the yellow dot if we'd prefer. These Fibonacci bars, though, if you put it one price bar back and you catch a new good trend, it would just trail up one price bar back all the way up like that. That would be pretty good. Problem is your spread. Remember, we talked about the spread in class. Sometimes that spread will come down and touch you. If you get your order too close, and then it will keep going. It'll just stop you out and keep going. So you got to be careful sometimes. All right, this market has just died right up here at the top. Let's see if it's not going to move back and forth just to practice our orders. Just practice your orders. We're in a demo account. We're just practicing our orders. Where are we at? We're in this is a mini. So that's why we're losing so much money. We're down $200 on this one. We really need the market to fall. Otherwise, we're going to lose a lot of money. This is a big market. Okay, over here, we're on micro. So this is a tiny market. So you can see we're only losing $8 on this one when we're wrong. This one, we're losing $235 because we're wrong. This one, we're losing $9 because we're wrong. So that's the difference between a micro and a mini. We need the market to fall for those orders. This one here, NASDAQ, this is NASDAQ micro. We could come in here and say, look, if the market goes up, we just hit buy. And then we come in and put our stop order down here, just anywhere, doesn't matter, edit. And then we're going to tell it to trail. We got the yellow dots there, so we can tell it to trail on the ATR. Hit OK. How's that? Now we just need the market to move, which it's not doing. It's just playing dead today. Just rolled over and died. After that big long rally up, you'd think that somebody else would want to come in here and trade. Nope, they don't want to. Oh, there we go. We got stopped out here. So this one got stopped out. This one here, starting to make money. This is a micro, though. It's tiny. This is a micro as well. This is the big one. That's the one we got our hiney handed to and lost all our money. Started trading the big market, going the wrong direction. Still looks like it wants to fall to me. Oh, no, wants to go up. Okay, well, we're long on these two. So we're making money on the market going up. Little ABC pattern is, I guess that is an ABC pattern to the upside. ABC, just like that. Land, just like you taught us in class. Oh, yeah, I forgot. There it is. There it goes. Why don't you have a long position on there? Let's, because I wish I was in down here farther. So let's put a stop limit order. If it comes back a little bit, we'll have an order to get us in. If it'll pull back and buy us right there, there's a good reason to why you use a limit order. Come on, pull back and heal our order. Give us a better price. I don't want to get in right there. Come on, pull back. There you go. Almost there. There it is. There it is. Almost touched our limit. Not quite. Come on, one more. Oh. Gonna do it? Yeah. You can move your limit order. You can grab it, push it up there. Make it easier. There we go. Okay, we got it. Now we got to put our stop in. We're going to put our stop in here on the yellow dots. And we're just going to go edit, trail on the ATR. Okay. Now it's going to trail up on the ATR. So if we get a nice trend, that would make a lot of money, but it's got a trend. We got to cut here. Are we in this market? Oh, we're short on this one. Let's exit this one here. So exit chart. Got to make sure the chart is the one that's selected. Where we're trading 3 charts. You got one chart. You got to make sure that the red one is, I got mine set to be red. So red is the active chart. So anything you do over here has got to be on the one that's selected with the red top. You can't be looking at this one and have a gray top and think that you hit the buttons and it's going to change it. Like if you're trading on this one, you can just grab the header and bring it over here. Make it closer to you. You don't have to move the buttons so far away. See how that works? Now let me show you something else. Let me show you some other fun stuff we can do. So the idea here, if you haven't seen, we're going to put a limit order up here. Take our not on that one. I did the wrong thing. If you put an order on, let's say you think you're trading on this market. Or let's say you think you're trading on this market, and you got this over here, and you're like looking over here, and you're like, I want to put an order on this market. And you come over and you grab your stop order, and you click it like that, and then you realize, oh my gosh, it's over there. I didn't want it on that order. You right click, just right click, and it goes away. Neat little trick. Now we're going to come in here. What are we going to do? I'm going to bring this over. Let's bring this full screen so that we can see what we're doing here. And I'm going to show you another neat little trick. Mostly the idea is that you're in the market, right? You put a limit order up here to take your profits. You put your stop order down here to lock yourself, to protect yourself against being wrong. And so that's the idea. You got 3 orders that you generally use. And so you got your long position, you got your stop to get you out if you're wrong, you got your limit order to take profits at this level if you're right. So that's kind of the name of the game. So let's exit those all out. Now you can use those and move them around like we've been doing. You can come in here, you can use limit or open orders like this. So we're going to go trail on the ATR, and that's an open order as an intercept order. So if the market turns and starts to fall, well, then the market will pick up that order on its way through, and you'll be in the market as it crosses over the yellow line, the yellow dots. So that's an open order, but then you're still going to come in here, and that would be a short position. You'd then still want to come in with your stop order above and your limit order below. So the idea is that you're generally working all the time with 3 orders, 3 order types. Stops to get you out if you're wrong. You can use a stop for entry, which is a trailing open stop, or you can use a limit order to get you out if you're right. So that's really kind of the combination. It's these 3 tools. So these buttons down here are now called QOCO buttons. So now we're short and we got our order. It's going to come in here and we can program it, or we can just drag it ourselves and put it wherever we want. I just want my stop order there. If it turns around, starts going back up, get me out. If it comes down here, like you say, well, see these low areas right here? Well, if it comes down and grab the tool. So if it comes down and tests those, I can put my order, line it up. I can move these anywhere I want until when it's closed. There we go. So I can line it up with that area of support and say, if it comes down, test that area of support, take my profits. So that's the kind of the game that you play. Most of the time, what you're doing is you're using these 3 order types. We don't use market orders very often. Not that you can't, you certainly can. But when you're doing this type of trading, you generally want contingency orders that are saying, well, if the market does this, then do this. Think of it as a computer program. You're a computer programmer, you write if, then, else. If the market does this, then do this, else do this. So that's the name of the game. It's the 3-step process. Let's exit out of here again. So the 3-step process is, if the market continues to fall, take a short position. Else, you can say else do a long position, and we can put one up here. And now we bracketed the market. Remember we talked about bracketing the market? So this way we don't care which direction the market goes. If it goes down, we hope it continues down, right? We're going to sell. If it goes up, we'll buy and we'll make money on the way up if it continues up. Problem right now, the market's not going anywhere. It's just going sideways. So it's going back and forth, back and forth. So, but this is a bracket market in anticipation of the market either falling or rising. We don't care which direction it goes. We just want to go one way or the other. And then we could put our limit orders out here, take a profit if it goes down, put our limit order up here, take a profit if it goes up. Well, how far do I want to take my profits, Len? Well, usually it depends on areas of support or resistance. You're going to want to take profits at target points because markets like to go down and touch previous levels of support or up and hit previous levels of resistance. So we generally like to put our orders in there to take profits along those levels. Or you can just trail it down on the little yellow dots, and then it'll get you out when it reverses and goes the other way. Now you can use reversal orders. So we'll come in here. Let's exit out of this one again. Let's say that we're in the market. This is not. Let's go to another market. They're all kind of at a stupid spot. I wanted to show you a strategy, but they're all kind of sitting at a spot. I can't do it. All right. So we can come in here. Let's just do this again. We just hit buy market, and you're going to put your stop order in there, and then we're going to edit, and we're going to trail that up, trail on the ATR, just like that. There you go. And now we're going to put our limit order up here. And we're going to put our limit order up if it tests that previous high right up in there. Just like that. Just inside of it so that if it doesn't have to go through it, it just has to test it, get up close to it. And that would take our profits. That's basically the game you're playing most of the time. Stops for entries, stops for exits, and limits for exits takes profits. Now, these buttons right down here, these are programmable buttons to do all three of those at the same time. I don't want to get too complicated, too sophisticated at once, but let's come in and do it, and then I'll show you how to do it, how it's done, and then you can practice yourself. Whew, that just kind of, that's not what I wanted. Why is it not letting me? Being stupid on my... Ugh. Whacked me all out there. I didn't want that. Okay. So we're going to come in here. Let's use this center one. Let's use, which one is this? This is the micro. That's the micro. This is the mini right here. This is the big one. So if we're wrong, we're going to lose a lot of money again. And when this market's being stupid, it's not trending. So we'll probably lose a lot of money again on our stop. But if it doesn't, we'll go up. We'll make a lot of money. We'll see. All right. So we're going to program this in to do this all at once. Now you'll notice that we have drop-down menus here. And on these drop-down menus, I have all these different programmed buttons in here. And if you come and play with me long enough, I'll give you all these little programs. We'll play with them and do them all. Okay, because it's part of the what's in the supplement and in the manual. Because we'll go through and we set up all these different strategies that are in here. So you get all these little fun different ways of looking at the market, and all these examples and all kinds of really fun stuff, right? So you get all these patterns and all these different plays. I oftentimes talk about how trading the market is like playing football, and this is my playbook. So this is my playbook of strategies, and I've given it to you here. And you got all these little playbooks that you can do based on how these orders work on the screen, how you drop them on the screen. So we're going to come back here, and we're going to show that you can program all these in like this. So I'm going to show you how to do it. You're going to right-click on here. Now, I've already programmed a bunch, but I'm going to show you how to program. So these little buttons, now they'll come with some defaults out of the box, and you can modify those defaults. You don't have to use those defaults. I don't know if they're even valuable. They just kind of show you the settings. Oh, see, we got stopped out again. Now we're okay. Okay, here's one of the problems. Remember how I said that you put your order in, and we got stopped out. So we were long the market. We got stopped out, and we had a limit order up here. Now the limit order is hanging out up there all by itself, and we got stopped out. So we're not really in the market anymore. We really don't want that order. But what if we had gone in and started cooking eggs and that order was hanging out up there? Well, we'd be in trouble. that order could now get filled. The market go up there and fill it and start and go short. Who knows? Maybe you'd make money, right? You got a chance that it could make money, but it's an order that you didn't really want out there. So that's why we use what we call OCO. One cancels other, and we've also got OTO, one triggers other. So we're going to delete that one because we don't want it. And now we're going to come in and we're going to use our QOCO orders. I'm going to right click on it. See, and we're going to right click and we're going to come all the way down here and we're going to add new QOCO. So now I'm going to give it a name. Now, it doesn't matter what the name is. You can give it whatever makes you happy so that you can remember what it does. But I like to give them numbers, and then I like to line them out kind of because we got a small spot. We kind of use acronyms or use short numbers, short things to let us know what we're going to do. But this is just going to be, let's just call it the number 99 order. And we're going to come in and what we're going to do is we're going to be let's be a buy market. So we're going to go in and we're going to make it a buy. So we're just going to tell it what's going to happen in each one of these boxes. So we're going to make it a buy. And we're going to make it a buy market, MKT. And then we're going to place a stop. Once we place this order, we're going to place a stop. How far are we going to place our stop back? We're going to place our stop, STP. We're going to place the stop back. Let's put it back 20 ticks. And then we're going to go, we're going to place our limit order. How far are we going to place our limit order out? Well, we're going to place our limit order out 40 ticks. All right. So then we're going to come in here and are we going to make it trail and do anything fancy like that? No, right now, let's just do that. That's all we're going to do. So we're going to have a buy market with a stop at 5 and a limit at 10. We're going to ignore all this other stuff down here. It's going to be good till cancel. We'll just make it a day order since we're day trading. We're going to come down here. We're going to hit OK. Now, when we come in here, we got this number 99 sitting right there at the buy market stop. Now, if I think the market's going to go up, all I have to do is just hit buy, hit that, and it automatically, on that market, they're really close. Let's make those bigger. So we're going to come down to 99, and we better make those a lot bigger. So I put them at, I set up here 20. Remember, this is just a label. I said 20 and 40, and then I didn't change it down here. So I got to go 20 and 40 here. I got to make it, I got to update it in my boxes. So it's a buy market 2040 and make sure that they match. So we hit OK. Now when we hit it, it automatically sets our stop to stop us out at 20 and take our profit at a limit of 40. We got stopped out. Now, because the market's going down and this is only a buy. Now we need a sell one. Let's go to QOCO2, right click on it, come in here, and we're going to set up the same thing, only this time we're going to call it a sell button. And did you notice that when one got hit, it automatically killed the other one? So we're going to call this one, we're going to call this one our number 99 because it's the same strategy, just the other way. And we're going to call it a sell market. And we're going to put our stop at the same thing. We'll do is 20. And we're going to put a limit at 40. Let's make it the same. And then we're going to, don't forget, you got to change it down here. Sell, and we're going to put this one at 20 and this one at 40. Now we're going to hit OK. Good till okay. Let's make it day again. We're going to hit OK. Now the market's coming down. Now all we have to do is just hit this one button, boom, like that, and it automatically sets our stop and our limit. Now our stop's awful close for this big old market. And this is our limit to take a profit down here. So let's see, there it worked. See, and then what happened is if you were off cooking eggs, then it hit your stop, you get stopped out, and your limit automatically goes away for you. So if you do it manually, if you come in here and you put your stop up here and your limit down here, and then you go short the market just like that, because that's the exact same thing we just did. Notice they're not tied together. So if one order gets hit like this, if our stop order gets hit out, come on, hit it. Now it's not going to hit it. Now it's going to make money. Notice that it's going to do the same thing. If it hits that stop, come on, pull the stop down so we can get hit. Well, now we're going to make a little money. We're pulling our stop down below where we got in. But I'm just trying to show you, if it gets stopped out, come on, it's close. It's going to let me bring it. There we go. Now we can move it. Okay, now this limit is still sitting there. That's the advantage of doing an OCO where one cancels other. So now we got the problem where this is sitting here. If this order comes down and hits it and keeps on going, we just lose money. If it comes down and hits it and turns around and goes up, we make money. But you don't want that there. It's left over from the previous trading strategy. So you have to hit exit chart manually to get rid of it. So now what we can do with these, because they're OCO, now I can show you we can actually add an OCO manually, but these do it automatically. So if we think the market's going to go down, we just go boom, just like that. And now we got our stop and our limit all in there. And if one gets hit, the limit or the stop, the limit, that would be nice to get hit. We'd make $200. Come on, flush, flush. Oh, see how close it got. Come on, buddy, touch it. Oh, that's the second time it got close. Third time's a charm. We better go take our money. All right, so now we got our money out and see it closed the position because it got rid of them. Now I'm going to show you something else. Watch this. So we can come in here and let's say buy the market. So we buy the market and I want my OCOs in there. I don't want to just go manually put them in there because then they're not connected together. That's not good. I don't want that. So get rid of them. X, hit the little X button, get them out of there. And right click on your thing and say add OCO right here. Now look, you got your little OCOs hooked to your mouse just like before. Now you come in, you put them where you want them, and you click them, and it sets them. But now you can move them manually. You can come in here and move this one up here, move this one down here. You can do whatever you want. Now we're long the market, so the market's got to go up. So we're going to put our stop down here in case it comes down, put our limit up here to take profits if it comes up. And that's how you do it. And now if it comes down, stops us out, then it automatically, notice how it has a little line between them. It automatically kills the limit order. If the market goes up, we make money. If it comes down, it stops us out, and we take a small loss. See what happens. This is how you practice. Just do it. Don't worry about making money and losing money right now. What we're doing is we're just practicing the orders to see what happens if we put them in. Okay, now what we can do is we can come in and we can modify those again. So now I can come in here. We're going to go into 99. This is a market order. Let's change it from a market order to a limit order. Let's go a stop order. Let's make it a stop order. And we're going to make, and we're going to have the stop be at 20. Let's make it bigger. It is a little bit hard to see. So we'll make this one at 40 and this one at 80. And then we're going to change this because it's just a label. So we'll make that 40 and this is 80, so we know. And we're going to make it a limit order. But Lan, why don't you keep this one and just make a different one? Well, oh, you could have done that, but I'm just showing you. Oh, this is a stop order, STP. So this is going to be, well, it's not going to be a buy stop. It's going to be whatever side we drop it on, right? So we're going to say it's a stop order, and it's going to have a stop set to it at 40 and a limit set for it at 80. This is going to be an intercept order with an OCO on it. I know it's getting a little bit complicated. But then we're going to come in here, and since it's OCO, we can come in here and we're going to trail it on the yellow dots, ATR, or one price bar back, or any of these other indicators. So we're going to go in, we're going to do the ATR. And I'm not going to do any of this jump stop stuff. We're going to leave all that still for now. And we're going to come in and we're going to go, okay. So now this is a stop right here that's going to go in and see the little yellow dot because we told it it's going to trail on the ATR. Oh, we better write that in there too, right? Because we're going to have it trail the ATR. We better tell it. So we're going to have a stop entry. This is going to stop trail ATR. So now we go like this. Oh, we better hurry. It's trying to get in there. And we drop it above the screen. It automatically sets everything for us. See how that worked? Now it's going to trail on those yellow dots as an intercept for entry. It's going to be one of these strategies. It's going to be this one right here. Okay, it's going to be the intercept. Now, this is the Fibonacci intercept because it's not using the yellow dots, but we're using the yellow dots with basically the same strategy. So we just wait for it to cross above the yellow dots, and then if it continues to run, there we go. See, we got filled. We got our stop sitting here at 40 ticks back. If it comes back and stops us out, we'll get out. And it got rid of the whole thing. The limit, the stop, everything went away. Now you can set those obviously at any level you want. We kind of had the stop a little bit close. But if it turns around and falls right now, you'd be happy that you had your stop close, right? but it's not. It's going up. It came back, stopped us out, only to rally. I hate it when that happens. So now we're going to come in and we're going to say, well, that was too close. Okay, we'll change it then. Come in here and say, I want my stop to be at 50. But remember, every time you make that stop bigger, you take a bigger risk. Okay. So now, well, we can't do it there. Can't do it here. Maybe we can do it over here on the Dow. Okay, we'll grab it, put it on the Dow. No, didn't like it. So we got to exit out of the chart. It's already crossed the yellow dot. Already violated the yellow dot. Okay, we'll do it to the downside. Here we go. Watch this one. Now we can come in with our stop, drop it below the market. We're just going to drop it anywhere down here. It doesn't matter because the computer's going to put it where it needs it. Boom, just like that. Now, those orders, those outside orders, that limit and that stop out there, those are inactive because they're OCOs contingent upon the market filling our limit order or our stop order, trailing stop order. So those don't become active until this one is hit. And once that one's hit, then those will become active and they'll start doing whatever you told them to do. Now we could tell those stop orders to trail too. So watch this. We can come in here. Let's exit the chart and we can come in and we can say, do that one. And we're going to say, I want my stop to trail. So I'm going to have the 50 stop trail 1 price bar back. So we can come down here. Now I want my stop, my trailing stop to trail price bars back 1. See that? This is your attached stop settings. You can have it jump if you want, or you can have it trail, or you can have it jump and trail. You can do all kinds of neat stuff in here. Make it do all kinds of fancy things. Trail until break even, filter higher, lower. You can do all kinds of stuff, right? You just need to play with them. So we're going to come in here, ATR stop, price bars back. Don't be afraid to play with this stuff. Just try it, see what it does. Not going to hurt you. You can't hurt the software. All right. You might lose a bunch of money practicing, but that's why we give you $500,000. Nobody cares. It's just fake money. So you come in here and you go, and if you need more, if you lose $500,000 practicing, well, you just contact the track and trade people and you say, give me more money. I need another $500,000. And they just go in and trickle a bit. They don't care. Don't be embarrassed to ask for more money. Nobody cares. They know what you're doing. They know you're just practicing and learning. That's why they give you $500,000, just so you don't have to worry about asking for more money all the time. All right, so now we're practicing. We're learning how all this stuff works. Now we're going to price bars back. So now we're going to go, okay, let's see what that does. We're going to trail 1 price bar back. Okay, just like that. Now we're going to bring this in, drop it on the little yellow dot, and then it will trail 1 price bar back if the market will move in our favor. It's not going to trail on the ATR little dots. It'll trail 1 price bar back. But for now, we're going to trail for entry. So this is going to trail the yellow dot. See that? It's getting a little sophisticated, I know, but it's not too bad. Following me, right? So we're going to use our entry stop. It's going to trail the ATR. And then our exit stop, once the entry stop gets filled, it's going to come down here, and then it's going to trail 1 price bar back behind the market. That's how you get your trailing stop to work on an OCO. So you say, okay. And so we just need to wait for that dot to get filled. Let's do one over here. Let's do one on each of them. Let's put one over here. And we'll do one over here. That yellow dot's free, so now we got freed up, so we can put one on there. There we go. Now we got 3 strategies running all simultaneously. Aren't we getting crazy? You can make it do whatever you want. What's the right answer, Len? How should I set them up? Set them up however you want. I got all kinds of strategies for you. That's what this is for. You can come in here and say, well, I want to do this strategy. Okay, well, set it up in your little auto trader thing so you don't have to do it manually every time. You just click one button. Oh, I want to do this strategy. Okay, well, set it up in there so you can do that strategy. I want to do this strategy. Okay, well, do that strategy. Okay, I'll do this strategy. I don't know, do this strategy. There's lots of strategies because the markets can do lots of things. You just set them up the way you want them, right? That's how you do it. Oh, we got filled on this one. So this micro on the Dow is long. This one's still trailing for an entry to the short side, and so is this. Sit and wait. Play your game. Pull out, put in your little iPhone and play a game while you wait. You can stab your little man. Come on, market, do something. Come on. Okay, see that? See they're moving? See how they're moving up? This is the active one. This is the one that's going to get filled, not that one. That one's a ghost right now. I know you probably can't see it through the internet, but to me, that's kind of an outline. It's a little miniature outline. It's a ghost. This one here is solid. This one's an outline. So meaning that it's ghosted. It's not active. The market's not gonna, you can't turn off your computer right now and walk away because the track and trade software is what's managing all these orders. It's like a little AI system trading bot trading for you. You set it up, you tell it what to do. Now you don't have to do anything because it's going to do it all for you. That's the nice thing about it. It's kind of like a Tesla car. You get it out on the road, then you push the button and it's on autopilot and it just drives for you. So that's what this is. You told it where you wanted to go. That's what these orders are. Put them into the GPS. Boop, 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 boop. Then you push the button and it just takes you there. So that's what this is. This is your GPS. We filled out the GPS. We told it where we want it to go. Now we just hit the button. Now we don't have to do anything. It's going to do what it's going to do. Oh, this one over here got filled. So while we were jabbering, that order got filled. So it's long. So if it turns around, comes back, stops us out one price bar back, well, that would be a bad luck. That's all there is to it. That's trading. Market's just not doing anything right now. It's just petering around. Can't catch a single trend. There we go. See that? See it move for you automatically? We got this set down to 1 minute. So they were getting a new price bar every minute, which means we'll get a new dot every minute. And we can tighten it up. If we think it's too far away, just come into your ATR and say, I want that tighter. But if you bring it tighter, you got the chances of getting stopped out, right? Don't bring it too tight. Ooh, that's too tight. Oh, there it goes. But we're not in the market. We're looking for the reversal, right? So our trailing stop, we got 25 seconds before that's going to jump to our new dot location. Whoo, look at the market take off now. So we're long this one. We got in with that one because that was the other side. You can play both sides. One on one side and one on the other. You play both markets, put the market up there and play both sides. So I'm going to take a long if it goes long. I'm going to take a short if it goes short. That's a great strategy until the market doesn't go either way. It just goes sideways. We hate it when it does that. All right, let's see if we can get these filled, and then we'll be done for the day. You guys can practice and play with this yourself. And I'll make sure you got your links. Let's go make, while we're waiting for that to happen, nothing. Oh, well, we're making money over here. How much are we making over here? This is a micro, so it's going to not be making very much money. It's making $20. So we're up $20 on this one. This one, we're not in. But this is a micro as well. This is a mini. If we were in that one, let's say we got in from where that yellow dot is to where that's $500. That's a big market. I accidentally no, I didn't. All right, see, it's moving the whole system all by itself. See if we can get one of these filled. Well, that's about as close as I dare. We can bring it a little closer, see if we can't get it filled sooner. Trying to get it filled so that you can watch it. Might be go the wrong way though. Got 34 seconds for that to jump to our new dot location. Let's bring this one in tighter too. Really, really suck it in there close. 21 seconds, we get our new dots, or we get our new price bars. This one's a 2-minute chart over here. Oh, we got to wait 1 minute and 11 seconds for this one to get a new price bar. I thought we put them all on 1 minute. Okay, see it jump? How come this one didn't jump? Oh, is this one price bars back? No, this is trail ATR. Why it didn't jump? There it goes. You can give it a little encouragement. We got a lot going on in this little computer right now with all the programs I got running in the background. All right, there you go. Now we got a crossover. See that? It crossed over. It filled this one. As soon as that one gets filled, now these are active. See, this one goes active. This one goes active. Now, if it'll come down and touch that, that'll take your profits, and then that will go away. Otherwise, it's going to sit there and trail down one price bar back. It's really flushing. How much are we making? It's a big market. So we're up. Oh, that's a little one. Mini. Oh, this one. We're up $200 right now. Oh, it's pulling back. Had our stop too far away, our limit too far away. It didn't fill it. Come on, buddy. Go down a little more. And you can move these. See? You can't grab that. If you grab that one, try and move it. See, it's going to come. Hey, moving and stop will disable me controlling it. Do you want to control it yourself? If you say yes, it'll turn off the auto trailing. You say no, and it'll keep doing it itself. You can grab this one because it's not moving. You can put that wherever you want. Sometimes what you want to do is you're like, oh no, it just barely missed my limit, and I'm afraid it's going to go the other way. You can slide it right up in there and take your limit off. Right now we took it off with a loss, but you can move that limit around. You can move the stop too if you want, but it's going to say, hey, I'm moving the stop. You told me to move the stop, and then you can move it yourself. All right, guys, that's how you practice your order tools. And hopefully that was helpful. Realize that the reason you're using all those order tools and all these different configurations is so that you can manage your positions a little bit better when you're doing this type of trading and scalping and you set up your orders to take profits along the way. You get into multiple contracts and all that kind of stuff. It can get pretty complicated, as you can understand. As you practice, you'll see that there's lots of different ways to do things. You can put multiple orders in. You can be in different quantities. You can do reversal orders. There's all kinds of fun things that you can do. Just let your imagination run wild with all the different ways you can set up the orders. But this one here is this is what I call the threes company, because you have three trailing stops. There's just lots of ways to do it. Lots of ways to practice. This is called the yippee-ki-yay. So you get in with a lot of positions and take them off all the way up the trend. If you could catch a trend. We couldn't catch a trend today. There's no trend. The market was just dying back and forth through the market here. So that's when you need to realize that you shouldn't be trading. The trend was over. We had a nice trend this morning, but then it just died at the top. So couldn't catch a trend. Know when it's time to stop. All right, guys, that's it. That's all I got for you. Hopefully you learned something, and now you can practice. Practice makes perfect. And so use those things. Go back and watch the video over again and see how I do stuff. And we'll just keep doing it. We'll do some more. We're going to work tomorrow. We're going to do day trading tomorrow afternoon. We'll talk a little bit more about it. And we'll do some of these different order trading strategies tomorrow afternoon at 1 o'clock Mountain Standard Time. Come and join me for that. If you had fun today, give me a little thumbs up. I always like to see the little thumbs up on the YouTube thing. That lets me know you're there and listening, so we know you're out there. And appreciate everybody coming by, and we'll catch you again. Oh, I want to show you something. We are making a little change around here. This is, first of all, this is the software that we're using.
Okay, this is the software I use. It's called Track and Trade. They've got two versions, one for stocks, one for futures. This is the website, trade.com. This is where you download a free 2-week trial. No credit card required. Okay, go download your copy, then come back here, follow along, and I'll show you all my settings.
All right, and for Pit News Magazine, for those of you who don't know, we switched the name from Pit News Magazine to SFO Magazine. I'll let Claire tell you about that.
Hey everyone, it's Claire. Okay, so before we get into anything else, I need to get something off my chest. And I'm a little nervous saying this out loud, so just stick with me here. You might notice something different. Pit News Magazine has a new name. And yes, this might be my fault. I may have gently, very gently, nudged Mr. Turner into a conversation that turned into another conversation, which somehow turned into a full-on name change. I swear that wasn't the original plan. I was just asking questions. Innocent questions. Like, what if the name told people exactly what they're getting? You know, totally harmless. So, Pit News Magazine is now SFO Magazine. Stocks, futures, options. That's it. That's what we do. No mystery, no decoding required. Now, full transparency. I'm still a little unsure if this was the right move. I mean, Pit News has been around for a long time. It has history. It has personality. And Mr. Turner definitely gave me that look when I first brought it up. You know the one. The I'm listening but I'm not convinced look. But the more we talked about it, the more it made sense. SFO Magazine tells new readers exactly what they're opening before they even click. No guessing, no assumptions, just clarity. So if you're wondering who to blame, hi, it's me. If you love it, I'll absolutely take credit. If you hate it, I'll be hiding behind my keyboard for a few weeks. Seriously though, we hope you like the new name. Same magazine, same content, same slightly opinionated takes on the markets. Just a cleaner label on the front. Let us know what you think. And thanks for sticking with us. Name change and all.
All right. Thanks for sticking with us today, too. Name change and all. And we will catch you guys later. And if you have any questions, please let me know. I'm here to help.
All right, that wraps it up for today. If you got something out of this, do me a favor. Like the video, subscribe to the channel, and share it with someone else who's trading or learning.
Hey, don't forget to tell them to subscribe to Pit News Magazine.
Oh yeah, definitely subscribe to Pit News Magazine. You'll thank us later.